How does the recent uptick in oil prices bode for the market going forward?
Well, when I see oil prices rise and oil stocks lead the market, I think back to something one of my old bosses told me, which was that's often a sign that whatever rally you're in is kind of nearing an end. I think that made a lot more sense, let's say 20 years ago, when oil was a greater percentage of the economy and a greater percentage of the market cap of the major indices. But it is still something to keep in the back of your mind. There seemed to be a point at $50 a barrel where you couldn't give away a barrel of oil. We were awash in the stuff, we're oversupplied. Now we're pushing through 70 and people are starting to get nervous that there may be difficulties in obtaining supply. That's similar to like a baseball team never looks as good as when they're winning or as bad as when they're losing. So you do tend to get caught up in the moment. But oil is in many ways the most geopolitically sensitive commodity. And we are at a time of geopolitical uncertainty as well as some economic strength. Both of those contribute to higher oil prices. On the economic side, if you've got factories humming and people driving their cars, or in the case of the US, SUVs, more and more miles to go to work or to go to job sites or things like that, that creates demand for oil and petroleum products. And the most recent EIA survey showed inventories dropping, which fits in that thesis. So that's part one. Part two is the president's recent announcement that he's pulling out of the Iran nuclear deal raises the prospect potentially of sanctions of Iran in the world oil markets. This one is much more of a moving part here because although the U.S. may not do any business trading crude with Iran, a lot of our allies have not left the pact, and so oil, again, sort of being globally fungible to a certain extent. If the Europeans continue to buy oil from Iran, I don't think that really creates the supply shock that the market may be pricing in. But you've got two situations pushing oil prices higher, and as a result, oil stocks higher. If you've been sitting on some oil stocks that have been languishing for a while, this is great news for you, and to a certain extent, the sector rotation had been ignoring oil and oil services for some time, so why not have that sector join the party? But again, I tend to worry because the higher oil prices have negative effects, certainly on consumer spending. If you're spending more on gasoline and to fill up your pickup truck or your car, then that's money that you're presumably not spending somewhere else, assuming that most Americans tending to be fairly stretched, most people tending to be fairly stretched. If that money's going into your gas tank, it's not being spent at retailers or Walmart, at JCPenney, at restaurants, or et cetera. So that has a negative effect because there is sort of a zero-sum effect to it. Secondly, oil prices, because they are used throughout the economy, if that raw material goes up, it has negative cost impacts to various manufacturers. And so that's kind of the risk of oil being the leader of the market. So in the short term, I think I'll let the oil traders really pick a price and direction for oil. The momentum certainly feels like it's being pushed higher. We'll see where the geopolitics take us. And the economics, I think, seem to be in place for some support to the oil price. But I tend to find that not a unilaterally good market leader. And so it's one to keep an eye out, because if that reverses itself, if the oil price reverses itself, if oil stocks, which had been leading the market, tend to sell off, and there's nothing left to replace them, that's not necessarily good, because you've added an inflationary element to the economy that hurts other sectors.